Hey everyone, welcome back to the Your Money Your Life podcast. We're in episode 255 of the podcast. Make sure wherever you're listening, you like, subscribe, five-star rate, and review this pod before we get into it. Do that now. Also, the YouTubers do the same thing. Do that now. Let's get into it. There's a lot to discuss. And first, we'll dive right in to the market. There was a lot going on um, in the market, and we have the chart here in the last couple of days. So yesterday, a big move down in the market. And we'll talk why there was a big move down in the market. Primarily, if you think about it, the Fed released more information, and they pretty much said that in 2025, so next year, as we see 2025 is coming up in a very short period, that they're going to cut rates a little bit less than we expected, right? They're only going to cut rates two times. That's what they're signaling now, that they will cut rates less than expected. So more of a hawkish view. Hawkish view being that they're looking to still combat inflation and still combat hotter inflation and not spur the economic growth and not lower rates and not potentially be more dovish in their stance. And so, if you see here, the central bank trimmed they did trim by a quarter basis point or quarter percentage point. They did trim the target range to 4.25 to 4.5. But the question now was what they'll do in 2025. So, um, you're seeing that people are, end of the year, there's different things that happen in end of year when it comes to trading. One, tax different things, people, leaving for the holidays. So trading used to be light, like at the very end of the year. We saw a pretty big move um, in the market just in one day. I think that sticker price and that shock from what the Fed's outlook was going to be really made investors pause and investors get a little bit more scared. You saw treasury yields jump and volatility, the fear gauge jumped as well. So that was all yesterday. So today, as we sit, the market is showing green today and is green so far. I don't know if it will be at the end of the trading day. You're seeing a little bit of dip from the morning trading. We'll see if it powers through the lunchtime through the afternoon or if it starts to fade towards the end of the day. So literally those commentaries from the Fed triggered this pullback, this slight pullback as of yesterday. And again, we'll see more from what the Fed here had to say, but they really just put inflation back in focus. They said that they would cut its key interest rate by quarter percent, and they also lowered the number of reductions. So they lowered the number of interest rate reductions in 2025. So the market, the Fed, everyone was signaling more interest rate cuts, a more dovish stance, a stance meaning that they would potentially have more money flowing in the economy. Would M2 supply, that's the money supply, go up? Would quantitative tightening be stopped and now go to quantitative easing? Would there be more interest rates cuts to spur economic activity? But they pretty much said no. We're gonna still combat inflation because if you look at it, cumulative inflation is still very high. Even though we're getting cooler on inflation, a lot of the stuff is still baked in, and you don't want to see a jump or a spike of any sort in inflation or in unemployment rate. And those are two things I talked about on CNBC yesterday morning, for those listening this Thursday, is about those two key factors. They don't want to see a spike in unemployment above 5%. They don't want to see a spike of an inflation data as well. So those two things are super in focus. And so you really just saw the Fed take a look at this and say, we're going to be a little bit more hawkish than expected. Um, so the dot plot, which is the Fed's projections, the Fed members believe two rate cuts in 2025 would be appropriate with the current inflation number. This is contradictory to a 2% goal. Thus, if we are to believe that the Fed, at their own words, 2% inflation is completely acceptable. That's what someone else is saying. So there was a lot of commentary about it, and much more so, there was a lot of action and words said from investors. That pullback was really investors making their vote. And so again, I think this potentially see this fade, this rally fade, but it could go come back, but we'll see. But again, if you look at the chart, literally yesterday was a strong move downwards. But again, take into perspective what we've done over the past month. Even with that strong move downwards yesterday, over the past month, we're still up. Year to date, still 25% on the S&P 500. Like that's, people get stocks crazy by a 1 day move and they don't pull the chart back and look at 25% on the S&P 500, which investors have been spoiled with back-to-back years of above double digit, well, a strong double digit growth. Like that's, really being spoiled as an investor because that's not typically what's supposed to happen in the markets if you think about the average annual rate of return or compound annual growth rate. So investors have certainly been spoiled. And so shouldn't be really that scary to investors. I still am pretty optimistic about first quarter 2024, excuse me, 2025. And maybe next week we'll have to do our talk of the year in review, and discuss, what was a good, incredible 2024 as we go into 2025, what we're planning and what everyone is planning. So big news there. Let's talk about the TikTok case. So it's literally, I think it's supposed to be January 19th, and the TikTok ban is supposed to take in place. So the Supreme Court is going to hear emergency arguments to save TikTok, the social media platform. Of course, it's a Chinese parent company, ByteDance. And so they're challenging the ruling that requires the app to be sold or face a US ban by January 19th. So they're going to hear arguments on why they can save it. I honestly don't know which way they're going to go. I didn't know it was coming up so quickly. So what does this mean? I love someone to tell us. Does this mean you just won't be able to access it on your phone if your VPN is in the US? Will you have to take it off your phone? Will it be automatically taken off your phone? I don't know. But there's people that are, there's 170 million TikTok users, and that's the US users. So it's going to be a big amount. What's that? One fourth, one third of our country that will have to no longer be able to use this app. And so it's going to be important to see what the Supreme Court says just 9 days away before which ByteDance must sell TikTok, assuming nobody acquires the app. So there's no way that a deal is going to get done in that short of time frame that's not already been cooking for many months, maybe a lot longer than that. And so this is going to be really interesting to see because I don't think we've seen anything at this magnitude before. A large, literally a large app that was being used by one third of the country is no longer going to be accessible. That's, unprecedented, from as far as I can remember. And so this is really going to be interesting to see if they can do it. I don't think everything will get done. You know, it's going to be really interesting for people that use the app and they run their businesses through TikTok. It's one that I've never really got into that much, to be honest. But I have no feeling one way or the other on the app. It's something that people enjoy. It's one that I've never particularly really used often. But it will be interesting to see how people adapt, adjust their businesses, all those different things if the app goes away, right? It's huge draw for some people in that sense. So we'll have to keep our eyes on what happens in that regard. Insurance. Insurance has been a lot in the news, but insurers are dumping more homeowners. So home insurers are killing part of the real estate market? The question mark. They've already nullified aspirations of would-be homeworkers in increasing number of areas in the U.S. deemed susceptible to wildfires, hurricanes, and other natural disasters. So a congressional probe released Wednesday showed that non-renewal rate for home insurance contractors has tripled in more than 200 counties. Coverage for more than 1.9 million homes nationwide has been dropped since 2018. Since insurance is required for a mortgage and most Americans need to borrow to buy homes, the result could be a doom loop for many communities. So insurance prices are increasing in some areas that insurance companies don't want to be in. So they're charging incredible premiums, and they're also dropping those areas altogether, saying, "Hey, pretty much the model of insurance works is that you pay us a premium, and hopefully nothing happens, so we can just take that money invested and never have to pay you out. But when they do have to pay you out, they lose a lot of money because they don't do well because the margins are so thin already, right? When a disaster happens, it pretty much wipes out the coffers, I'm assuming. So now they're saying insurance is failing families, it makes sense. It's time to this is one person saying that insurance is failing families, and it's time to face the truth. Luck, not just hard work, plays a huge role in financial stability. This person is an insurance producer, and is pretty much telling their story about families across America losing insurance, property, life, and health insurance because of systematic gaps and lack of support and education. Interesting. So, you're seeing different people try to understand what it means, with insurance. So, that's incredible to understand. But I mean, The numbers, it's really interesting to dig into the numbers on insurance companies and all these other companies. But of course, you want people to be able to, one, afford their homes, and two, have them insured. And if something devastating happens, that's the reason why you're paying insurance. So, much more for us to dig into there. I really want to dive into those numbers and come back with to you guys and have a longer discussion about that, to be honest. Chat GPT, we talked about AI a lot. AI, of course, using those tools are important. I utilize those tools, I'm finding different ways to explore and utilize those tools to make my life more efficient. Chat GPT, Gemini, Claude, those are some of, the chat bots and different things you can do. Google has Notebook LLM, which is an incredible resource and tool that we've talked about. But ChatGPT just debuted what it's called an easy, convenient, and low-cost way to try out a chatbot. They're calling 1-800 ChatGPT. Users can test it out for 15 minutes free per month. They can also message the chatbot over WhatsApp. So I think it's allowing people to either call or text to get like free, quick answers. So starting today, you can text the world's most famous AI through WhatsApp called 1-800 ChatGPT. If you're in the US, you can even call it. So right now, to use ChatGPT, you need to go to their website or download the app. But now they changed the game. They allow you to just text or call directly from WhatsApp. And if you're in the US, you can literally pick up your phone and call this number and talk to the AI. Think about this, what this means for a million people who could try now easily texting or calling a friend. Um, People who use their phones, they can now do this. So they're really changing the game and making it easier to access the information that people want. And again, these bots are something that you have to figure out how it includes and introduce into your life to make it more efficient and make it more easy to do the things that you want to do. So that's a big part of this is figuring that out. And so they're doing different ways. And again, it's not all figured out. It's not all cohesive yet, but it's going to be. And you need to be at the forefront of understanding how it makes your life better. And that's what I think a lot of people are doing now. So really, really cool. I think that's really cool. It's something to keep your eyes on for sure. Let's see what else is there. Amazon return to work. We talked about Amazon's return to work mandate, but now they're saying, hold on, folks, we don't have enough office space for all of you to come back at once. They ordered their 350,000 plus corporate employees to be back in the office by January. But now they told Atlanta, Houston, Nashville, New York to hold on. And they're apparently saying that they'll wait till May, but they don't have enough office desk space for all the white collar workers because Business Insider reported that Amazon told some employees to stay away until May, and it's unclear how or if the company intends to solve the space problem. Amazon says to bailing on office construction plans and breaking leases to save 1.3 billion. So they, during the COVID, bailed on some plans. They broke some leases because they weren't using them, and now they told everybody to come back to office, but then they don't have all that space left. So they have a dilemma there. They are People always question is when you do the return to office, is that a way to do backdoor layoffs? Because some people may have moved to different things. Now that's come back to the office, and they're going to be like, okay, I can't actually come back. I'm out. Nearly 75% of employees said they had to consider quitting because of the rule. So it's a really interesting problem and dilemma there. How other companies that also did this, meaning let go of office space, stopped construction plans for offices, how they're going to handle a return to office mandate if they do implement one. That's going to be really, really interesting to watch and find out because again, a lot happened in those 3, 4 year time period. But we did talk about TikTok already. Here's another story talking about how Supreme Court is going to look at this Hail Mary from TikTok about it being banned in just a month now, literally in a month. They're making a last-ditch effort. We talked about this already, so we'll see. We'll see. I'm really curious on what happens there. In more news, Apple reportedly working on a foldable iPhone. Interesting. I don't get the allure of a like a foldable phone. I mean, I used to love the Sidekick, which was like a way, like it could flip it out, flip it back in. That was always cool. But I don't know, a foldable phone. What's so cool about that? I guess you could make it larger and then fold it up so it's really takes up less space when you store in your pocket. But the fold mechanism on itself isn't anything to write home about, I don't believe. So what's the big deal? What is the big deal? We'll have to keep our eyes on that very, very closely. Let's dive into the personal finance question of the week. Couple ones, couple good ones. I believe there's a couple good ones that we could really talk about what's going on. What percentage of tap to pay payments were made using a mobile phone? Tap to pay payments. I use tap to pay payments all the time now. I don't ever really carry my wallet. Everything's on the iPhone wallet. I'd say a lot of people, I mean, I see a lot of people use it here in New York. New York's a little bit more faster than most places. I would say 70-ish percent. Oh, wow. Only 29%? Really? It's a pet peeve of mine when people pay in cash. It's inherently slower. Inherently slower. You gotta use even card is slow. Like you have to swipe and does oh you can doesn't swipe, you have the chip. Oh, you gotta put the chip in. Only 30%. You gotta flip this up. We gotta get this 50%. We gotta get this 50% in 2025. I want 50% of people using tap to pay. But all store everything on your Apple wallet on your phone, store it on your watch. You can do that too. Much simpler, much easier, much faster for the people in line. All right, we were trying to get places. We have places to go. This is New York. It's a New York minute. Get faster. I don't know the New Yorkers got to skew that higher. It's got to be the Midwest. But let's look at the next question. How much money was spent on video game microtransactions last year? That's interesting. I've even spent a little bit of money trying to make my 2K player a little bit better. He still sucks, but it's because I just don't play as much as I would like. But I'm gonna guess how much money. So we're doing a conglomerate. We're adding up all everyone's. I mean, it's not going to be over 1 billion, right? Because I feel like they spend. They just released that NCAA was the most purchased sports video game since NBA 2K 2021, I believe. And that did like 1 billion or something in sale, or didn't even do 1 billion in sales, or maybe it did. I can't remember the exact number. I would say the number for this is less than 1 billion, so it's hundreds of millions, I would guess. Oh wow, I'm way off. Microtransactions generate $73.227 billion dollars in a year. I am way off. Man, I guess that would make sense. Why was I thinking hundreds of millions? You're thinking all across all games. I'm just thinking the games I play. But that would make a lot more sense. There's a lot of different games that people play out there that I have no clue about. I just bought Call of Duty, don't know how to play it at all. But I have to learn, I guess, if I get the chance to play. So that's pretty interesting. Wow. Okay. Really interesting. Well, folks, that is the Your Money, Your Life podcast this week. Again, make sure you like, share, subscribe with your family and friends. We're going to keep doing this every week. Of course, it's Christmas next week. So happy holidays. We will probably have our podcast up and going next week, as we always do every week. But make sure you have a happy holidays. Stay tapped in. Share this with your family and friends, and we'll talk soon.